Hey guys, Akil Stokes here. Welcome back to another weekend trading edge video. We got a lot on the radar today between the Forex market, some indices as well. So we're going to kind of be short and sweet. That way this isn't a 30-minute video. But before we get started, make sure you subscribe and like this video. A lot of you guys watch this on a weekly basis, but you're not subscribed. So do me a favor, support the channel. Hit that subscribe button. That way it shows me some love and we can continue to grow this YouTube channel. We're going to get started today on the Euro Yen. And this is my trade of the week. This is something we've been actively stalking in the market pretty much all week in our live trading room sessions. The Euro Yen has been a very disgusting pair as of late. Like many of these pairs in the dog days of August, we've been consolidating, but we just broke out from a very relevant level, right? You can see here on the weekly, price has been in consolidation. We tried to spike here lower a few weeks back in July, and then we gave an even deeper probe right at the very end of July, only to remain in this consolidation. Well, what we did this week was we finally violated our highs here, and a violation is a break and close above. Broken record alert. We have a four-step process here at Tier 1 Trading we teach called Identify, Predict, Decide, Execute. I know it's boring, I know it's repetitive, but you guys know my philosophy on the markets, right? Consistent analysis plus consistent execution equals consistent results. So we want to have a consistent process that we follow. That way we stay on the right track with all of our analysis and ultimately all of our trades. So in that process, I want to identify the higher high, higher close, the violation of this level. That allows me to make a prediction that price is likely to go higher. Now, we don't have any relevant level of structure until way back, I think it was what, 2008? Right? 2008, we played a little game in the live room this week. What were you doing in 2008? And we got some weird answers. Someone wasn't even alive, which made me feel really, really old. So I'm not going to play that thing with you. But you can see 2008 is our last relative level of consolidation. And although we are in a bigger consolidation zone, right, we are not at any relative structure level within that zone. So we do believe that we can go higher. I'll skip past some of the target taking procedures that we did, so it's not a super long video, but we are looking for buying opportunities here. So with that being said, what we're looking for the week to come is this. We're going to go down to our daily time frame, because this is where I mainly operate on, daily and 4 hour. What we're looking to do is identify the level of previous structure resistance that was broken right here, the red line. We're looking to go down to your trading time frame, whatever that is, and we're looking to catch some relief, right? Markets, just like anything, can't go up forever, right? Imagine throwing a ball. It has a lot of momentum when it leaves your hand, and then it goes in the air. Eventually it reaches an apex and it has to kind of come back down to earth before it can be thrown higher again. Markets are the same way. And you can see we had a massive extension from really about 156.5 to about 159 even. Psychological number, Fibonacci extension up here. Great place to do some target taking if you were a buyer. No surprise that we're seeing some relief here in the market. Sorry, they moved all my tools around here on TradingView. No surprise that we're seeing some relief here in the market. Again, RSI overbought as well. Look for relief at a minimum back to retest our previous level of structure resistance, which we would hope would act as support. And then as a maximum, it's going to be these lows right here. Now, again, the deeper this retraces, the less strong trend we predict, or less strong extension that we predict. But it wouldn't surprise me if we came somewhere between that first red line right there. Really, this level would be the ideal level to see a retracement to, but as long as we're in this zone, I'm still interested in buys. Once we get down here, it gets a little fishy. We may finagle some targets a little bit to give us some safety, but I think this is a good level to look for buys right here. And of course, later in the week, we can put in all our Fibonacci's and our volume and kind of pinpoint where we want to approach it. But for this weekend's video, we're going to keep it short and simple. Look for the pullback, look for the buy. Lots of room to the upside. We're talking multiples of hundreds of pips. We saw this earlier in the year for you guys that follow on a frequent basis on this pair, the Euro Yen, also the Pound Yen. So it's time to reload for another potential home run trade. I'm excited. Something else I've been excited about in the markets as of late have been advanced pattern formations, right? These were things, harmonic patterns that were popular, I don't know how many years ago when I first started trading, and trading goes through trends. Not actually what works in the markets, right? So hopefully you have something that is tried, true, and tested and works under all market conditions. But as far as like what's popular out there on the internet, right? So it was, I got started with patterns, and soon after that it became patterns. Now it's smart money concepts, right? But although these are kind of boring and monotonous because it's essentially just measuring out a series of Fibonacci retracements and extensions and, putting a sell limit order in this case on, these things are kind of that slow engine that just keeps chugging in the right direction. And over the last few weeks, really about 4 weeks, we've had an amazing time with pattern trading. And this week started off a little bit rocky, right? I did get skunked out of a few. There's a one on, was it Euro, dollar Canada? No, Euro, dollar yen, one of the two. That news came out, CPI, right, got me by a little bit, then ran down to hit target. So there has been some negative patterns to start the week, but over the last 4 weeks, these things have been tremendous. And this week, I think I was 2 for 2, which is, good for me, 50% with the edge in my favor, obviously from risk reward. But this is another one that's setting up. This is going to be a cipher pattern here on the dollar Canada. I'm going to measure this out for you. We'll kind of shortcut it right here, but we're looking at this move to this move being our X to A, our initial impulse leg or anchor leg here. This first retracement being our A to B, our extension down here being our C leg, our B to C leg, and then our completion point is going to be right here at our 786. That's where our orders go. And then the zone of completion, right? If you're someone that's more conservative, maybe you're looking for a specific entry reason within the completion zone, it's going to go from that 786 to the top of our X leg right here. And this is a bearish pattern, so we are looking to sell. Price action consolidated a little bit before it. Again, a lot of this was news related as we had some big ones come up to the end of the week. But if we can get another pop higher, we're going to be right in that cipher zone, setting us up for a sell. Another selling opportunity that's on the radar, and this could be another big one, is going to be here on the New Zealand dollar, the Kiwi, right? Once again, we want to take a look at our most recent level of structure. And if you guys are new to the channel, structure is the backbone of my trading. It is the main part of my philosophy. Everything I do in the market, even pattern formations, which kind of live in their own realm as far as my trading goes, revolves around structure. So it's the first thing I look at. It's what allows me to make my decisions on directional predictions. It's what allows me to make my decisions on where should I enter, where should I exit. It is the say all be all. It doesn't have to be that way for you, obviously, but just to kind of give you an idea of my trading style, it is all based around support and resistance, supply and demand, or just structure. So price action broke and closed below this level of structure. So similar to the euro yen, just in the opposite direction. We can make the prediction that price is likely to continue lower, and we have a far way to go. If we just bump up to the weekly here on the Kiwi, right, you're going to see this is the recent level of structure. We don't really have our next major level of structure down until we get to this level right around here. It's going to be a big zone because of this little funky green wick down there. If I wanted to isolate it a little bit, I'd go like that. But you can see we have the potential to go from, what are we at, 59.88, so let's call it 60 even, all the way down to, at a minimum, right, 58 even, 56 or 57 even, or maybe even 55 flat or above 55 flat right there. Now, again, we're going to have to do some work during the week as this kind of plays out, to pinpoint targets, but just to kind of give you an idea, if we take our Fibonacci retracement tool and drag it from our swing low to the swing high of this last move, we'll get a 618 Fibonacci retracement right here. That's the golden mean. We'll get a 786 a little bit lower. If we take a Fibonacci extension tool and drag it from this swing high to the swing low here and back up, you're going to see we're going to get a 127 right at the top of our zone right here. We'll get a 1618, which is also the golden mean, right at this lower level we were paying attention to, above 56 flat. And if we do one more just Fibonacci inversion, and again, we'll have to do all this over throughout the week, but this is a good starting point. You'll see that we have a 1618, excuse me, in this level right here around the 786. So right now it looks like, our Fibonacci confluence is confirming the structural levels that we laid out there. But again, we won't know the true details until price action starts to play out a little bit more. But fact of the matter is, just putting this on your radar for a potential short. We violated structure. We are likely to continue down. My personal style is to wait for a retest, so a little bit of relief. So wait for the pullback and then to see if I can catch the extension down to that lower level. Following up on our theme of breakouts and continuation, we're here on the Euro New Zealand daily chart, and this is going to be very similar to the Euro Yen, where we just broke out of a previous level of structure. This is my favorite pattern right here, called an ascending triangle, where we have equal highs and we have higher lows. It's basically the market just begging for a breakout to the upside. Doesn't always do it, don't get me wrong. That's why we want to wait for confirmation in many cases, but this is a good example of one that did break out to the upside. So as always, again, broken record alert, what I'm looking for is a pullback and a chance to go higher, right? So a little bit of relief like we saw with the Euro Yen, back into our previous level of structure, into our simple pattern formation, and then looking to catch the extension higher. Also, like Euro Yen, there's a big structure clunk looking left here, right? There's a little bit of structure here, which we cleared already, but we have a big structure clunk over here. I wouldn't aim for the very highs, but what we can do is we can bring our Fibonacci's on once this move starts to complete. We can kind of isolate what levels we think are important here structurally, and then pinpoint a good area for profit taking. But there's some good potential on this one, just like the Euro Yen. Now we have to keep our fingers crossed and see if this thing actually gives us the retracement that we need, or the retracement that I need in order to take advantage of this opportunity. So in case you missed it, we had 3 new episodes of the Trading Coach podcast released this week. We had how to learn technical analysis and what/who to avoid. We talked about profit expectations and trading strategies, and replied to a comment where a trader was, the trader was wrong. And I told him why he was wrong. Then lastly, we had reality check success and 1%, where I kind of break you down as far as like smashing those false expectations and then build you up with a new reality on what can be had from trading. So if you haven't done so already, make sure you check out those episodes. They're available on your favorite podcasting app, and I release 3 new episodes each and every week. Next is Euro Canada. This one's going to be a little bit different. This is another simple pattern formation. This is a classic rising channel, right? You can see the market is bouncing back and forth between these two kind of ascending trend lines right here. We have divergence down on the RSI, and what divergence means is that our RSI, our indicator, is doing something opposite than the price chart, right? Price chart, we're continuing to make higher lows and higher highs. We're moving to the top right-hand side of our screen. RSI is obviously going a different direction, moving to the bottom right-hand side of our screen. This is a clue that the market tells us that, hey, we may see some relief. Now, what we discussed in the live trading room this week was the thing that we don't know about these patterns, and this is why I don't personally trade them, is we don't know when that relief is going to come. We know that once we have this second hit right here, right? 1, 2, 3, 4. We have that confirmed pattern. We don't know if this third hit is going to be the one that gives us relief. We don't know if this fourth one is going to be the one that gives us relief, right? In this case, it was the 5th one that gave us relief. And there are clues that we can use, obviously, but it's really hard to pinpoint when these things are going to reverse. And that's why we want to be predictive in our analysis, reactive in our execution. Now, what I am looking for here, or I guess the theme of today's trade, is the move down is I don't want to say it's done, but I'm not interested in the move down already. We've already moved a significant way, right? What I would look for is, where is this relief going to end? And I'm going to look for the base of our pattern right here, this previous level of structure support. So if you're someone looking for a buying opportunity, pay attention to how price reacts if and when we get down to this level for a potential continuation higher. Because guess what? We haven't touched our structure highs. We still have a way to go, right? 148.5 is where we're most likely to hit our previous level of structure looking left. This is just a little relief. This isn't a reversal pattern. It's a relief pattern, a little bit of relief in what can potentially be the next extension higher. Now, I would say this. This is going to be what's called a decision point, right? If we hold this level, obviously we're looking for that move up. If we violate that level, then I would anticipate a move lower. And if we do move lower, we're basically going to this level right here, a little bit above the 146 even handle, about 146.20. You can see a nice little structure shelf right there, nice little consolidation before the breakout. I haven't drawn any fibs on here, but it looks like a 618 Fibonacci retracement. Be right? Ooh, right between 50% and a 618 Fibonacci retracement. I think we also have some volume picking up in that level as well. Yeah, you can see the lull in volume right here, little gap, right? So it should be smooth sailing once we break, or if we break this level, and then volume picks up right around, really right at that level I drew in right here. So two options here. One is the buying opportunity if we get to this level and hold for the extension up. Another one would be a selling opportunity if we violate this level, thinking that we can push back down to those 146.20s. Next up is going to be oil, right? We did it. We broke and closed above our previous structure highs right here. Once again, broken record alert. This is my style of trading. It is simple yet very effective. It's not a lot of fancy stuff to get you all excited and pumped up. It's basic knowledge of support, resistance, price action identification. Yeah, kind of bare bones, meat and potatoes type of trading. But we violated our previous structure highs here. We've got our pullback. If we jump down to the 4 hour, look for a continuation higher here on oil. Heading over to the Dixie, this is going to be a little bit of a recap off of something we looked at a few weeks ago in here, but we still have that potential bearish bat pattern forming here. It's going to be right at our 886. You can see the zone is already put in. We got close to that level, then started consolidating and pushing sideways, and it looks like we broke out to the upside to end the week here. So if we can get a continued move up to this, 103.10 level, we're going to have a bearish bat pattern completion, which means we're looking for selling opportunities in this zone on the US dollar index. Speaking of indices, we're going to head over to the NASDAQ next. This was another one on 4 hour/daily where we had an advanced pattern formation complete. It's still in play, so I want to bring it to your attention once again. Again, these are little bits of recaps, but if you guys are joining every week, then this should still be on your radar. But X to A, A to B, B to C, C to D, our completion zone is going to be right from our 886, which is right down here, to the low of our X leg right there. You can see we are right in the middle of that. So if you're a bat pattern trader that maybe missed it, left your mind for some reason, it's an at market entry, or as we spoke about before, if you're looking for an alternative way to get involved in a trade, this is a perfect way to, or perfect zone, I should say, to look for it in. So before you go, make sure you hit that subscribe button. Again, many of you guys watch this video, but you're not subscribed. So show me some love and support me by doing so. Hit that like button on the way out, and I'll see you guys next week with another episode of the Trading Edge. And don't miss the midweek videos that sneak out as well. All right, until next time, plan your trade, trade your plan. Take care. If you guys are looking to learn how to trade, or maybe you're an experienced trader, but you're kind of stuck at an obstacle and you can't figure out how to get over it, make sure you check out the educational services that are available over at our platform, www.tier1trading.com. We work with traders of all levels. We have training courses that are meant to take you from the very beginning, the very basics, all the way to the advanced, and of course, everything in between. We have a lot of live sessions that are used for support. We have a great community of traders that you can use for support as well. So head over to our website, www.tier1trading.com. I recommend the 14-day trial. That way you can try us out to make sure we're the right fit as far as trading philosophy, as far as teaching philosophy, and it's risk-free. So there's no auto bill or anything like that. You simply lose access. www.tier1trading.com. See you guys over there.